Last night, we saw the taco trade start to take effect. Nvidia, major gap up. However, after the CPI report today, did that put in a short-term top in the market? Now, when we come over and look at how the indices fared across the board today, the Dow was down 436 points. Nasdaq was up 37 points. S&P 500 down 24 points, with the Russell 2000 being down 4.35. When we come over and look at advancing issues versus declining, we had 75.7% of issues declining on the day. Then we come over and look at the sectors across the board. Only one sector was in the green. That was technology. Is that really that big of a surprise? And then we come over and look at the fear and greed index. Right now, we're teetering between greed and extreme greed with a reading of 74. Now, it all had to do with Nvidia today. Nvidia last night started to move on the way up once we got some news out, but look at Nvidia on the 4-hour chart. Big gap up, kind of a candle of indecision, followed by another candle of decision with a doji candle. And we look right here, did Trump just taco out on China? Nvidia stock and China ADRs are flashing a signal. Now, a lot of people are saying, watch out, Nvidia to the moon, but I want to warn you guys of something real quick. Nvidia on the daily chart, yes, big gap up. However, if we start looking at Nvidia on higher time frame charts, like the monthly chart, look at Nvidia. It is overextended. And look at the MACD indicator. Is the MACD indicator confirming the new highs? The simple answer is no. How do we know that? As prices come up, make new all-time highs. Look at Nvidia. Did MACD make a new all-time high? Absolutely not. So the momentum indicator is saying, hold up, not so quick. Then we come over and look at this article right here. Inflation picks up again in June, rising 2.7 annual percent. And if we actually come over and actually look at the CPI numbers that came out this morning, we can see, yes, year over year came in at 2.7. But then we look at month over month, came in right in line with expectations, 0.3, forecasted 0.3. However, the previous reading was 0.1. So we did see a rise. Then if we even look at the core, it came in at 0.2 versus the forecast of 0.3. So that's better than expected. But look at the previous reading, 0.1. So again, we saw the core on the rise once again as well. But then if we come over and actually look at the CPI report, you can see we're on the move back up. This is the highest reading other than January that we've seen so far this year. But I do want to caution you guys on a couple things real quick. One, if you look at one of the factors that actually contributed to a not as bad a CPI report as it could have been, that would be energy. Energy was a big takeaway, actually lowering the CPI report number. And if you look at crude oil, imagine if we would not have gotten that drop in crude oil. If we would not have gotten that drop, crude oil would have been substantially higher. And just think how bad the inflation numbers would actually have been if indeed crude oil had not started to make its move back lower. Now, if we come over and look at the volatility index on the daily chart, you can see we're up 0.8 of 1%. And here's that level, that white line. If we zoom this out, we've talked about this in the past. Quite often when the VIX gets down towards this area, we got to be very careful. Why? Because the stock market can experience some type of volatility, and we're starting to see a little bit of a movement up just yet. Now, it is a little bit too early to call it, but something else to keep an eye on. The dollar index today on the move up. You see that weekly zone we've had mapped out for a couple weeks now. We are now up over the midpoint of that zone, and we're going to see the dollar to continue to go higher. Now, with the dollar going higher, we come over and look at gold. Gold on the move lower, and that's exactly what we would expect with a rising dollar. Gold breaks below 3292.7. Watch out. The next stop is going to be down here about 3239. Anything below that, I would turn my attentions back over here towards this zone, basically candle body, right here to the candle wick, and just project this out. That would be the next area, anywhere from about 3182 down here to about 3124. Now, more importantly than gold and the dollar, what is the 10-year yield doing? If we look at the 10-year yield, back on the move higher on the daily chart, we've been talking about an ABC projection at about 4.86% all the way up here. Now, where the invalidation point is for this price target would be at 4.126. If we break below that level, that would negate the ABC pattern. And normally we see the impulse leg, we see a corrective leg, and then we just march right up and complete that target. Well, in this case, it turns into more of a complex ABC pattern. We have the impulse leg, and then we have this long drawn out consolidation. And if we see the yields continue to go higher, well, guess what? We're probably going to see stocks continue to be under pressure. And you might say, Mike, continue. What do you mean? The Nasdaq just made a new all-time high. And we need to go ahead and grab our Fibonacci retracement for the Nasdaq off the daily chart. We need to go ahead and adjust it up higher. Now, I will go ahead and remove that double top target because we can see we have went well above that. But if we look at the MACD indicator, look, as we're making new all-time highs, the MACD indicator simply not confirming those new highs at this point in time. Then we jump over and start looking at the 4-hour chart. Again, the MACD indicator has a bearish cross, and you can see this volume area that we have right up in here. If we see the Nasdaq really starting to break below 550, which is still quite a ways away, then watch out. We're probably making our next stop somewhere around 540.39, and then maybe down here towards filling the gap, also near this next high volume area at about 531.75. Next, we jump over and take a look at the 30-minute chart, and look, today we almost made it all the way back down, filling the gap. And I got to be honest with you, I did not think we would come down as far as we did this morning. You look at the SPY, for instance, the SPY came all the way down, closing the gap. And again, I did not think the SPY would be able to do that either. Now, as we look at the volume profile, we closed below value area low, which is at about 558.07. Now, normally within the next 1 to 2 sessions, we're going to see the market come back and test that level. But look real quick, look at where we close and look at where we're trading now. And after hours, we see the Nasdaq is actually down 72 cents. And after hours, we were actually able to close that gap that was left behind from today. Amazing deals out there. Apex Trader Funding, 80% off all evaluation accounts. My Fund and Futures, 50% off first-time users. Tradeify, 50% off first-time users. And 35% off reoccurring purchases after that. Use promo code Mike. If you guys want to trade with a prop firm with the best payout policy out there, Take Profit Trader right now, 40% off all the evaluation accounts. Best yet, no activation fee. Take advantage of these offers. Use the link in the description box down below. Now, if we come over and look at the futures markets real quick, starting off, look at the 4-hour chart. Here's a highlighted area that we had mapped out during the live stream. Now, if you guys don't want to miss the next time I go live, make sure you subscribe. You have the bell notifications turned on for all. This week, we have more Take Profit Trader accounts to give away. But this was a minus development area within this profile. Now, it's kind of hard to see, but when the market shot up here, the profile was very thin like it is right here, going all the way up towards the upper part of that level. As we came into that a couple times today, I said, watch out. We're probably going to go all the way through the bottom of it. And yes, indeed, we made it all the way back down through the bottom of that level. Now, as we come over and we start looking at the daily profiles on the 30-minute chart, one of the areas we were talking about this morning was right around here at about 65. Then the next area was down here about 23,043. We were able to make both of those levels, but something we were not able to do today was take out that P point. So tonight, whenever the new floor trader pivots update, I am going to heavily be focused on trying to target the new P point. Also notice on the daily chart, we are closing below value area low, which comes in at 23,110. 20 control is going to be up here at 23,155.50. Value area high will be 23,185.5. Now, if we can get above value area low, I would then want to target that point of control. However, something to be mindful of, if we do come up above value area low and we start coming back down, I would then once again want to start to focus on some of the lower targets to the downside. Now, some of those lower targets, I want to come back over to the 4-hour chart and say, okay, maybe we make it back down towards last week's point of control, value area low, and then back down towards the lows of the range. Now, if we get back below 23,525, watch out. We have the potential for that volume profile rotation on the way down. And if you guys paid attention in Sunday's video, what is one of the things I warned you guys about? With a D-shaped profile, whichever way we first break, quite often ends up being a trap. What do we do out here this week? We broke above here, and now we're starting to get a pretty decent reaction from the levels and now coming back into this area. So was that nothing more than a major trap out here in the markets? Now, before we look at the S&P 500, what do we have on deck tomorrow in terms of economic news? 8:30 a.m. we have the core PPI coming out. Then we have the PPI coming out at the same time as well. And that's really all the major economic news we have to contend with. There are going to be a few FOMC members speaking throughout the day. Now, as we come over and look at the SPY real quick on the daily chart, we need to go ahead and adjust the Fibonacci retracement up a bit. I'm still in the camp where I think at some point we get that 38% retracement. And notice what we have up here, right? We have a high volume area, which we can see on the volume profile sticking out right here. Now that we're trying to come down below it, if we get price acceptance below it, watch out. We're probably going to be on our way down towards that 38% retracement, and then more likely than not down towards the 50, and then maybe down towards this high volume area down below us. And just to put this in perspective, we measure right up here from the all-time high down towards this high volume area down here. That's roughly only 4.5% drop. That would still do nothing in terms of basically destroying the uptrend that we've been in for the last couple months. Now, the 4-hour chart, you can see that MACD indicator getting a little bit more aggressive on the downside, good separation of the two lines. Then on the 30-minute chart, MACD indicator turning down below the zero line. And again, showing no signs of flattening out just yet. However, we are closing below value area low, which indicates that tomorrow or the following day, highly probable we come back and test that level. But I want to warn you guys, anytime we close outside of value and we do not revisit that level within the next 1 to 2 days, quite often it's going to be several weeks before we come back and revisit that price point. Now, as we come over and look at the S&P 500 futures, notice today we're almost all the way back down towards the lower portion of the weekly range. And now we're starting to come into view some of those high probability targets that I've been talking about, I've been watching, I have not given up on yet. The first one's going to come in here about 62.66. Then we have one down here about 62.36, and then all the way down here at 61.88 and a quarter. Now, we also kind of had a D-shaped profile out here on the S&P, and today the S&P was able to make a new all-time high. So this week we got the full rotation up, and now we're working on the rotation down. Point of control target already taken out, and 62.73 would be the next target if we did not already hit that today. Let's actually see if we did. Actually, we did. So if we're trading above 73 and a quarter, watch out, we're probably going to rotate higher. The next target would be the high volume node right up here at about 62.75. Then the point of control, value area high, and then a move all the way back up. Now, I am in the camp where I do think we're going to come down and start working on some of these lower levels, and we'll see tomorrow if the PPI data is enough to push prices back lower. Now, on the S&P 500, unlike the Nasdaq, we were able to take out that P point, but notice value area low is up here at 6,300.75, and we're closing way below that price point. Point of control, 63.05 and a quarter. Value area high, 6336.75. Now, I want to caution you guys, quite often, I am very aggressive about trading back into value when we close outside of value. But when we're near a high or a low in the market, it's quite dangerous because this could be the turn where we get a multiple week pullback before we come back and revisit that level. So any trades I try to take up towards that level, I'm going to do it with a little bit smaller size than I normally do. I do want, if we stay below value or low, I do want to focus on some of these targets. Again, these high volume nodes that we already spoke about moments ago. And let's not forget, we still have this point of control down here, 61.45. Now, if we grab our Fibonacci retracement on the 4-hour chart from the low all the way up here to the high, look at where the 38% retracement level comes in. It's now coming in where? Right next to this high volume area. So not only do we have a high volume area on the composite profile, but we also have a key Fibonacci retracement level as well. And then right where the 50% level is, well, we have that untested point of control that's been left behind for a couple weeks at this point as well. Now, if you guys like to learn how to trade the B as in boy shape profile, then you want to make sure to watch this next video right here.